kind of facility. The Prophet ﷺ has a very interesting incident. Sayyidina Bilal, the person from Ethiopia who used to call for the prayers, he knew that Prophet Muhammad, may God's peace and prayers be upon him, loved high quality dates. So one day he brought a few dates to Prophet Muhammad ﷺ. So he asked him, Bilal, where did you get these dates from? He said, Prophet Muhammad, I know that you love these dates. So what I did, I took a large number of small low quality dates and bartered it or exchanged it for these few high quality dates. The Prophet responded immediately and he said, this is exactly riba. And he said, why? Ya Muhammad sallallahu alayhi wa sallam. He said, because you should have first found out the real value of these small dates. And he said, how? He said, by selling it for the currency used at that time, which can be silver or gold or whatever other currency. And then you take that silver and gold and you buy the larger quality dates. And this is a concept we call in Islamic economics, finance and banking, marking the asset to the market. In other words, the dates, smaller dates, you go and test the market with it and know exactly how much it will command in that measuring device we call money. And you take that measuring device which you call money and buy the larger dates. This way you avoid participating in riba. And riba is not only interest, it is a process, it's a system which actually prices money. And money actually has no price because money is a man-made commodity and it's not even a commodity, it's just a measuring device. We finance it with a very unique system which is based on sharing, on a joint venture with a declining equity. The whole idea is that American Finance House, Lariba, would say get in buying the house with an 80% down payment, and the person who wants to buy the house would go in with 20% down payment. Then they have like a joint ownership, 80-20. And the person who wants to live in the house would tell American Finance House, but you know, I don't want you to be my partner for the rest of my life. So American Finance, what do you want? So the person who wants to live in the house, I want to buy this house 100%. And I can give your money back, let us say in 10 years, 20 years, 30 years. So suppose the house is $300,000, just to make the numbers work. So 80% of $300,000 is $240,000 put by American Finance House Lariba, and 20% of $300,000 is $60,000 put down by the home buyer. Home buyer will say, well, Lariba, I'm going to pay you $240,000 over 10 years. Lariba will say, fine, we will let you do this with no time value of money. And you divide $240,000 by 10, that means, Mr. Client, you will be paying $24,000 a year or $2,000 per month to return my capital back to me. We call that return of capital. Return, which is R, of C, which is capital. We call it ROFC, R-O-F-C. And then we tell to the client, we say, well, yeah, but then this property has a market value. Now, how do you measure the market value of this property? By marking it to the market. How do you mark a home to the market? By going out to the real estate agents and telling them, I would like to lease the same kind of property, same number of rooms, same specifications, same neighborhood for, say, 5 years. How much would that lease go for? And you get 3 estimates, Mr. Client, and American Finance House will do the same. As a matter of fact, American Finance House would call the real estate brokerage, put down the name, the agent, the time the call was made, and we accumulate 6 numbers, 6 estimates, from which we get a fair lease rate that's acceptable to the client and to American Finance House. And because in the first month the client owns 20% and American Finance House owns 80%, and suppose that the lease of this house, let us say, $2,000 a month, then American Finance House share of that income is how much? 80% of $2,000, which is $1,600. And this is what we call the return on the capital invested by Lariba. Run C. R, which is return on, C, which is capital, run C. And then the monthly payment for the first month will be $2,000 rough C, the return of our capital back, plus the return on capital, which is $1,600, makes $3,600. Now, of course, as the client pays on a monthly basis back to Lariba, his or her ownership goes from 20% to 25% to 30% to 50% to 70% to 100%, and the distribution of the part of the lease, of course, changes. And we have a computer program which we call Islamabad 4. We have 4 generations of it. The reason we call it Islamabad is we developed it with a very well-known Islamic scholar in this field when we were financing the house of his cousin here in the United States. And we kept developing it, and we have now Islamabad number 4. And we get now the monthly payments to be straight line, to be the same, and we go into the ownership decline by American Finance House and increase by the client until it is paid off. Now, this is the first part, which we call the Islamic legal foundation. Now then we have to cross the bridge, which makes you also legally viable according to the laws of the land, because we are here not only to apply the Islamic law but also to apply the laws of the United States of America. And to do this, we take all of these cash flow figures and put them in a traditional mortgage program, and we come up with what they call an implied interest rate. Why? Because there is a regulation in the United States banking and finance laws called Regulation Z, like zebra, which is called the Truth in Lending Law, which should divulge in full transparency what this means in terms of the system used in the United States, and that's interest. So we have an implied interest rate disclosed to the client and well known to the client to make sure that the client can compare and to make sure that we are fair to the client. The second thing is the last thing left to the American consumer to deduct from his or her taxes is the mortgage payment. So we put down all the paperwork that will make that implied interest satisfy the requirements of the tax laws to make it an actual interest, and the client can benefit from his or her payments in terms of mortgages. And we do exactly the opposite of what the Riba conventional banker does. The Riba conventional banker, you remember, he wanted to know how much is the monthly payment. But based on our lease, the Lariba banker knows already the monthly payment for the house. He puts it in the computer program, he puts in the amount of the financing, the number of years, and the unknown here is another percentage sign. It is not the interest rate as the Riba banker puts it, but it is the actual rate of return on the investment that you would invest in this house. And that number is very important because it will tell you if this house or this car makes economic sense to buy or not. If it is 12%, that means it's a good return because the investors that are investing in Lariba would probably expect 6%. So we say, Mr. Client, go ahead and buy the property. And by the way, we do not want you to suffer because you want to apply the socially responsible Lariba model. We're going to unilaterally reduce the rent so we can make it commensurate with what the investors expect and competitive with what the other Riba bankers and mortgage companies do. And everything goes well. But then the other possibility is that the rate of return on investment can come out to be 1%, which conceptually means that it is better for you, Mr. Client, to rent now and not to participate in an inflationary bubble that is suffering in this neighborhood, because it is better to wait. And Mr. Client, we cannot finance this property. And many clients come to us very upset, very disappointed. Say, how can you deny me? All these banks are giving me because I am very well employed, I have a very good salary, and so on and so forth. We say, Mr. Client, we are not in the business of renting money like Riba bankers do. We are in the business of investing in meaningful activities like buying a home that makes sense and a car that makes sense. So this way we can get the spirit of what the prophets of God, all of them, including Prophet Muhammad, have brought in, and that is money is a measuring device. When you embark on an economic activity, then it has to make economic sense. Not only this, but there is a third possibility, that you get a rate of return on investment that probably is, say, 5.5%, while your investors are expecting 6%. So we go to the client and say, Mr. Client, we think that you can go and renegotiate the price of the house or the car so you can get the 6% that is prevailing in the market. And indeed, we have done that in many parts of the United States. Net, the Lariba banker saves the home buyers